Welcome to the Shh, Mom and Dad Are Talking podcast,
where we put the babies to bed
and talk about
whatever we want.
Oh yeah, I am incredibly excited about this particular podcast. We have a buddy of mine, Fong, who's on, and we're going to be discussing investing
Money.
for beginners. Fong, say what's up to the people. Welcome.
Hello.
Welcome. Hello. How you guys doing?
Good.
You know we have to bring you in with some hand claps, man.
He just learned how to use this thing, and he's just pushing buttons.
I'm excited.
Nice.
No, but in all seriousness, oh yeah, man. I think that this podcast has the potential to help a lot of people. We just got through 2020, and for most people, 2020 was a really, really, really rough year. We experienced a lot, but one of the things that I'm happy to say that I was actually able to get involved in 2020 was actually investing. And Fong, we met in a Facebook group. Somebody created a Facebook group about investing. So that's what we want to talk about today. Now, before you guys turn off the radio or the YouTube channel and all of that kind of stuff, I want you to understand that while investing seems intimidating, we're going to talk about this in a manner that hopefully is helpful to people who are going to be new to investing, because that's what this particular episode is all about. So Fong, man, thank you for coming on to the channel. Before we get into the questions, just tell us a little bit about you, whatever you feel comfortable sharing about yourself, and then, we'll just get going with the podcast.
Okay. So a little about me. I am 36 years old, and a little bit about my professional background is I work in public safety. I work in emergency management, so I deal with like disasters and things like that, helping people prepare for pretty much anything that could happen to their family, such as flooding, hurricanes, tornadoes. So one of the things I do is I enjoy planning. I enjoy looking at information and data, things like that. And
perfect for understanding finance.
Yeah.
Pretty much, yeah. So it's really has segued in a lot of things where I look at a lot of information and try to see what trends are and things like that.
Awesome.
A lot of the stuff that I learned actually was from high school with my my algebra teacher and things like that, which is something that we'll probably end up talking about is compound interest and stuff like that.
Exactly.
I'm sorry.
Go ahead.
I just learned about compound interest, and the fact that you learned it in high school from your high school algebra teacher. Had I known this when I was in high school, oh my God, I would be so far ahead of where I am right now. That information is priceless that you must have got in high school.
Yeah. And it's really important. I guess it's time to jump straight into it.
Yeah, let's do it.
For investing, and we don't want people to get intimidated. So this is going to be for people that are really looking to start investing, but they just don't know where to start. Because that was my story. When we got into trying to invest, I didn't even know where to get started. I had 401k and stuff like that for my job, but I didn't know how to actually start investing. So my first question to you, Fong, is, it says many people want to invest, but it seems intimidating. What would you say to someone who was wanting to invest and it seems intimidating?
I think the thing that a lot of people need to do is actually just think about, let's just say you don't want to jump all the way in. So let's just say you have $5 and you put in this $5, because a lot of people have that mistake of trading versus investing. They don't understand. They think it's the same, but it really isn't. Mm-hmm. So, you always hear these bad news and bad things about like the stock market crashing and how everybody lost everything.
Mm-hmm.
So I always implore people to really start with that first $5. Just say to put $5 into a stock or an ETF, which that's something maybe we could explain later as well.
Yeah.
And just buy that $5 and see where it goes. Because if it goes up, you made maybe $6, made maybe $7, you may make 50 cents. But you could tell that your money's not just going to go poof, into somebody's hands, and you've really only lost $5.
That's a good step.
You will see, and that's the first step, is to really just see how it feels, and then you can move on from there, and then you can put a little bit more in when you feel more comfortable.
Exactly. And what's interesting, Fawn, what you're speaking on, and that was going to be the next question. People listening to this podcast going to say, invest $5. I can invest $5? What can I do with $5? And that's going to take us into something that's called fractional shares. And when I learned about this, it really was a game changer to me, because I think there's a misconception out there, and I'm speaking from myself as well, that when you're investing in stocks and things like that, that you need to come to the table with thousands of dollars to be able to invest. Or let's just say if you're looking at a stock like Tesla or Amazon, and that stock might be $2,000 or $3,000 a share, people don't think that they can even get in the game. But there's something out there called fractional shares that allows people to purchase portions of shares. So let's talk about fractional shares a little bit, Fawn, for somebody who is brand new to this and they're wanting to invest, but they don't have a lot of money every month to actually invest. Let's talk about fractional shares.
Okay. And so one of the biggest things that people don't realize this, and a lot of people may not know this, but about 3 years ago, before you can invest, you had you had to pay commission. So if you wanted to buy one single share of anything, you had to pay either $5 to $10 to even enter into the stock market.
Wow.
So what happened was Robinhood actually started this whole platform where it was free for you to trade.
And hold on one second. And guys, Robinhood is an app that you can download on your phone that allows you to invest, for people who don't know.
Not
but we'll talk about it
sponsored.
more. Yeah. But go ahead, Fong. I'm sorry.
And correct. So it's just a brokerage. And then so essentially, once Robinhood came into the game and they're like, you know what, we can offer free investing to anybody that wants to invest for free, it started kind of changing the way the whole industry now. So now the whole industry, if you look, if anybody charges commission now, they're not going to make it. You know what I mean? So now you have all these platforms are pretty much going, you know what, now what do we do next is we got to step up our game. And so they started offering fractional shares. So instead of buying a whole, like say, for example, you wanted to buy Apple today. Apple's about $130 and you don't have $130. You could actually just buy a small smidgen of Apple for $10, $15, and whatever you have, and you just constantly buy it over and over and over. And that really brings into another part of this, why investing is important, is there's this concept called dollar cost average. And a lot of people don't understand this, but think of dollar cost average as you buying something over and over. And let's use an example. Let's say you want to buy a pair of shoes, right? A pair of shoes, let's say it's $9 for this pair of shoes, and you buy it today. And then tomorrow you buy this pair of shoes and it's at $10. Well, and then you're like, okay, I'll buy it again. And then the next day you buy it at $11. But if you really think about it, you only paid $10 for those three pairs of shoes on average, because you add 9, 10, and 11 up, you really get 30. Divided by 3, you paid $10 for the pair of shoes. So you're always going to be able to buy stocks at the best price, because you're not buying it at the ultimate high, but you're also not buying at the low.
Exactly.
So you're buying it right in the middle the whole time. So that's why fractional shares and dollar cost averages is important. And I don't know, I've looked at several people's account. I've done this several times. I've seen people's account, and dollar cost average is the best way to go. If you look in your account, for example, in SAS, you notice that majority of your stuff are green. They're in the green. And even though the stock market might be down,
you're still winning.
Your whole portfolio is winning. You're in the green most of the time.
Yep. And it's that fractional shares, like what you were saying, Fong, is a game changer, because like you said, many people, especially right now with what's going on with people are trying to recover economically, they may not have $100 to invest at one time. But if you have $5, you can buy something. And we were talking about this, Candace, actually on the way here, and we were driving here, about how fractional shares allow you to change your mindset, because instead of going to McDonald's and buying a hamburger for $5,
okay, this can buy me $5 worth of shares for Apple or Alibaba or Tesla.
Yeah,
it could buy me this. Same thing like with shoes. These $60 shoes, that's $60. That's an ETF. That's one share of like a blue chip ETF that I can have, or you know what I'm saying? It's getting you to, it's almost
Correct.
like your brain is being rewired
Wired.
to look at these numbers differently or
Yeah.
your money differently.
Yeah, and it's really
That's-
simple because go ahead, phone.
No, I mean remember that conversation we had a while back, and I said the whole thing about investing and stuff is going to change the way you really think about money. The way you're going to be like, well, why would I buy this? Why would I even get this? Because I could put this somewhere else.
Yep.
Yeah.
And it will change the way you do things.
Yeah.
Yeah.
It's definitely.
That's like one of the. Go ahead.
No, it's just definitely made me think about how money has just become like a tool. Like that's how I look at it. Just like, okay, this tool is going to help me do this.
Yeah.
So it's just a different way of thinking of it because, for myself, I know that the only thing I knew about the stock market was, like you said, Black Monday, Black Friday, people jumping out of windows because they were buying stock on margin that caused the Great Depression. I knew that. And then I have this picture of people on this floor saying, sell, oh my God, we're losing everything and ripping out their hair. That's the, and then trading versus what you kind of, talk about is investing.
And real quick, I wanted to say something. I was thinking about it. When you buy your fractional shares, and this was something that really fascinated me, you can buy a lot of fractional shares and they could eventually equal to having a whole share. And I can speak of that personally because I bought some Tesla stock and I now have several shares of Tesla, but I didn't buy them all at once. I literally bought them as fractional shares. And, there was a time where Tesla was, I don't know, $1,500 a share, right? I didn't have $1,500 to throw at once at Tesla, but I would say, here's $100 here. Here's $20 here. Here's $100 here, $10 here. And then I looked up, I had a share of Tesla. So when you buy your fractional shares, it's a way to buy some of your most expensive stocks or those expensive stocks and still be able to get in the game. And just think of it like this. I heard somebody say this like this a while ago, Phone, and I'm sure you agree with it. Instead of going and buy a Nike shoe, if you like Nike, buy the Nike stock.
Yeah, I seen something like that, but they were doing it with like Tesla. Like a Tesla car would be like $70,000.
Yeah, and
they're not like that anymore. And then if you invest $70,000 into Tesla stock, like the difference of what you can, make. So I think that was I love visuals like that. It just clicks for me so quickly when I see a visual.
That was the first post that I put in our group before T told me he needed me to take over the group. So T and I, we partner in our Facebook group, and that was something I wrote at the very beginning because it was a concept people didn't understand. And that's a concept that I don't know if you ever read a book called Rich Dad Poor Dad. That's a great book for people who want to understand investing. But what you're talking about is literally liabilities and assets. We as humans, if we don't know anything about money, we only think about liabilities. We want to buy things that make us look good, make us look rich. We try to impress people by buying things so that when they see us, they think that we're rich. But what we ought to do is actually buy more assets, things that make us money. So assets would be things that, appreciate in value. They're like stocks, bonds, real estate, anything that really makes us money, whereas liabilities cost us money to maintain. So things like debt, clothes, shoes, alcohol, gambling, drugs, cigarettes, whatever it is, those are liabilities. And if you have more liabilities in your life, the things that cost you money, you're never going to be rich.
Exactly.
Because you need more assets in your life. And that's something that's really hard to teach people. And that's when that mindset switches, you can see that you went to McDonald's, you're like, hey, let's really think about, hey, should we buy this $5 hamburger, or we could go ahead and put this into our retirement. Let's take this food home and cook it versus, everybody gets a
number
full
one
meal because we could save so much money by us doing it ourselves, versus, 5 here, 10 here, $15 there. That's what costs us over time.
Exactly. And I think that this is a perfect segue, Phone, because some people are going to be interested in and say, oh, fractional shares, how do I get in? So this was another area that really prevented me from investing, is that I didn't know where to go.
Yeah.
So
knowing where to look.
Yeah. So let's talk about some of the user-friendly platforms that we've used to start
Okay.
investing. Some user-friendly ones out there.
All right. So I personally, I use several of them because majority of them are free. So I use, and some of them I will pay a little extra just because, I like the functionality they give us.
Mm-hmm.
So one of the best apps that I found out to use is actually Stash. Even though you pay a little bit of money, Stash teaches you so much about investing, right? To me, investing, like I said before, it's a huge difference than a trading platform. So a trading platform would be like Robinhood, Fidelity, E-Trade. Those platforms, they're all free now. They used to charge you money just so you could buy stocks and stuff like that. For people that are beginners, I try to keep them away from that or teach them to kind of, hey, let's get good at Stash first and then move into Robinhood.
Mm-hmm.
Because to me, Robinhood and any really trading platform, they really set you up for, I wouldn't say failure, but they open the door so wide for everybody. And if you don't know what you're doing, it can cost you money.
Mm-hmm.
It can cost you money in the long term. And one of the things is people get very emotional when they see the price move. Like sometimes it's not good to see a price go up, down, up, down, up, down, up, down. And then when the price goes down, you just put money in.
They panic.
So so they panic and they sell. When you sell, if you sell at a loss, you're guaranteed to lose.
Right.
100% of the time. If you ever notice, if you sell anything on Stash, it takes time. It takes a whole day for the whole process to go through. Yep. And if you buy some, it takes a long time to buy. And so they don't care about the price, as you can see. So we got Stash, we got M1 Finance. I really like M1 Finance as well. It's very similar to Stash. They set it up in a pie. So, in a pie where you set a certain percentage that you want, and they're just going to buy it at that certain percentage. So a lot of times, like Apple, Facebook, and stuff like that, I'll set for 10%, 9%, 8%, and they'll buy that much out of the money I put in. So if I put in $100, $10 will go to Tesla, $5 will go to so and so.
I like that.
M1 Finance is great. It's free as well, and it's extremely user friendly. Stash charges like $1 or $2, I think, but it teaches you to invest as well, and I really like that. So that's another platform I use.
Yeah.
A third platform I use is called Acorns.
Yeah.
Now I put a little bit of money in Acorns because I want to see how certain platform make me money. So with Acorns, they buy ETFs, and so I guess that's a great way to go ahead and segue into our next conversation, what an ETF and a stock is.
Mm-hmm.
But Acorns buys ETFs or a basket of stocks, and they continuously buy it over and over. I've gotten about 20-something% return on it. It's okay. It doesn't make that much. But one thing I know about Acorns is it's extremely safe. It's very low risk. I continuously make money on it. I haven't lost any money. And so that's really for like people who are older that are like extremely beginners and they don't want to see a lot of market movement. So when the stock market drops, you don't see as much. So Acorns is great for like seniors or even kids who they're just getting into it and they don't monitor stocks. Like as you may have a custodial account. I use another one called Webbull. Webbull is more like Robinhood, where it's like trading. It's quicker. You could buy and sell very quickly.
Mm-hmm.
So that one, to me, Webbull or Webull, however you want to say it, it's less user friendly than Robinhood.
Yeah. Okay. So those are some good ones. And before we go any further, I probably should have said this a little bit earlier. We are not licensed investors or anything like that. Yeah. Really, this podcast is intended to be a resource to people who are just, you want to get in there, but you just don't know where to get started. Or really, it's about us sharing our story about how we were just there 5 months ago of not even knowing where to start. And now we're in there
trying to, figure out what's our next
Well,
move going to be.
Yeah.
You know?
And have been doing relatively well,
Mhm.
getting good returns, 40%, 30% returns on things that we've invested in. So I just wanted to get that quick disclaimer out there. And then also it's like, we're not advertising for any one platform
We're
or
not
anything like that.
sponsored.
But we're just giving you some
Right.
ideas of where you might could start. Cause like I'm using Stash and Robinhood. And one of the reasons that I love Stash, and we didn't talk about this earlier, and I guess it's a good way to just bring it up, is that you can set your stash up to auto take out money. So like, let's just say you get paid twice a month.
Like a bill.
Yeah, you can say every month on the 1st and the 15th, I want you to take out $100, and I want it to go. I want 25 to go to this company, 13 to go to whatever you want to set
it's
it
like
up.
paying yourself first, basically.
Yeah. So I like that.
Correct.
And one of the other reasons, and we're going to talk about it a little bit later, I love Stash, is I have a custodial account for my son, and he has his stocks too. But we're going to get into that just a little bit later. I'm trying to see what my next question is. I wrote, so go ahead,
Well,
Candace.
Patrick's looking for that. Can you explain what an ETF is?
Real quick,
Because
yeah.
I don't,
Sure.
acronyms.
Yeah, and so that's a conversation we had at the very beginning too. I think a lot of people don't understand, and so they kind of shied away from it. So essentially, an ETF and a mutual fund are very similar. So I'm bringing up another, I guess, vocabulary word, but right now, if you have money you put into like a 401k at work or a 457, a 403b, anything that deals with your retirement that you at work, you put into what you call a mutual fund. And a mutual fund is run by a fund manager. They keep up with, you put money in and they buy certain groups of stocks. And what a mutual fund and an ETF is basically a basket of shares. So in this basket, you could put whatever stock you want into it, and that's called an ETF or a mutual fund.
Mm-hmm.
So for example, if you look in Stash, there is an ETF called Young Money.
Yep.
Mhm.
Inside of Young Money, you have PayPal, you have Facebook, you have Amazon, you have everything that deals with newer technology companies. And so, that one, if you've been buying it, you've been doing very well.
Yep.
Yep.
I love my Young
We
Money.
both said yep.
when I was telling somebody
Yep.
about my Young Money stuff, they was like, "You talking about the record label?" I said, "Nah, Shotty, I'm talking about Young Money, the ETF."
You're
Yeah,
such a dad.
they haven't made you any money.
yeah.
And so that's one of the ones I told you about. And then there's one that's Cloud9, for example, that deals with everything that deals with
Cloud.
cloud computing. Yep. Cloud computing.
Yep.
Cloud9.
Yeah.
On Cloud9.
See, I would have never
ETF
thought about
name
that.
It's actually Sky.
Mm.
What do you mean?
Well, because we had that conversation about like how do you get in the mind frame of saying, you know what, I'm going to look up this company. I think you were golfing one day. You said you were golfing and you were looking at like I think the golf carts and thinking like, or maybe this was somebody else, but who makes those something on that golf cart, and then you start looking it up, and it's just getting in that mind frame. And now it's like I'm almost trained to look at it like that. Like the other day, we were at a gas station, and I was telling Patrick, I was like, why don't the gas stations invest in getting electric charging stations at the gas station as well? Like, I wonder who makes those chargers.
Right.
And then from there, it was like I went through this wormhole of figuring out who's making these vehicle chargers and just kind of like going in and saying, okay, are they publicly traded? And it just becomes this cycle of like everything I'm almost look at, and I'm just thinking about who makes that?
Yep.
Who has this company?
And I'm the exact
100%.
Yeah. And ETFs are cool. We'll probably have to do another podcast or something like that because we talk about doing this and just kind of focus on specific things because we want to kind of keep it general. But ETFs are really cool because you get a chance to invest in multiple stocks by buying one. And then what that also does is it kind of helps reduce your risk a little bit because let's just say I'm just making up a number. It might be 10 stocks in that ETF. 1 or 2 of the stocks might be doing bad, but the other 8 are doing good. Yeah. So it's balanced, so to speak. And I think that's a perfect segue to our next question, which is let's talk a little bit about compound interest and how compound interest can really help parents prepare and help their children be financially set utilizing custodial accounts.
Okay. So compound interest is extremely important. That's the number one concept in investing. If you're investing and you don't know anything about compound interest, you might want to like research it a little bit more. But I'm going to break it down. So compound interest essentially your money makes interest, and that interest makes more interest, and it makes more interest. And it's almost like a snowball that you roll down the hill. It gets bigger and bigger and bigger. And eventually what it'll do, it will exponentially grow. So you may make $1 or $2, in a couple of months, but in a couple of years, you're going to be making hundreds of thousands of dollars every month just because it compounds. It's building money. So one of the biggest things in investing that people don't think about is there's actually three forces that work with you in investing. You have the money you put in every month. So that's normal. You put in, say, $5, $10, $20, whatever you want to put in every month, every week, every day if you want. And then you have another, what's happening is the capital gains. That's essentially your stock growing in price as it grows. All the shares that you have start to grow bigger and bigger and bigger. And then the last thing that's happening is the dividends. Some stocks and ETFs pay you money because you technically own these companies. When they make money, they pay you money. So, for example, AT&T is one of the big dividend. They pay out big dividends, and so you could buy AT&T right now. AT&T is very cheap, and it's actually undervalued. It's actually been moving sideways for many years. But if you look at it and you buy, say, for example, 100 shares of AT&T, every quarter they give you money so you could buy another share of AT&T essentially. Just imagine you keep on doing that, and you will be well off because AT&T is going to continue to give you money for a long time. And that's really compound interest.
Yeah.
Most people that put money in the stock market, they buy mutual funds through their retirement. What they do is they are only looking for about 12% a year in interest. 12. That's nothing. 8 to 12% is all they're asking, and that's how much the S&P 500 is normally giving people, 8 to 12%. However, that 8 to 12% in 30 years compounded, if you only put in, like, say, you start out with for your kids $5,000. You start out with $5,000, and you put an extra $50 to $100 every month into their account. It's compounded 8 to 12% a year, and you're looking at about 30 years. Your kids are going to be multimillionaires when they retire, and they've only really put in maybe $50,000
as a whole.
So
Yeah.
that's yep, because of compound interest. So you're looking at about $55,000 you put in total, and you could get out $2-3 million because of compound interest. Let me ask you this: for your account this year on stash, you've only been in the markets for maybe 6 months, right? Because of what I remember talking to you. 6 months. How much have you gotten out by just listening to what I told you to buy?
Shit, close to like 40%.
40%, right? So just imagine, I said 8 to 12% was good. You're getting 40%. Let's just say on average you're getting 25% on what you've done. That's crazy. You're doubling your money pretty much every 3 years. You've doubled your money. You're getting about 40% right now, and you've only been doing it for about 6, maybe less than 6 months, right? Maybe 4 months.
Yep.
And so think about that. Now, you haven't even been a year yet, and there's a good chance that you're probably going to hit about 60 or 70% by the end of a whole year. I am getting more than 30%. I've gotten almost 100% this year. So, and that's pretty good to me. That's really good. Now,
the pretty good, the pretty phone stop. Pretty good. Hey, there you go. Look.
No, where's the other button?
No, you messing up.
Just pressing buttons at this point.
Yeah. Oh, you talking about this one?
Yeah.
Oh my God. All right. Anyway. Oh Lord.
Oh.
But sorry, phone.
So yeah.
100%. That's good.
Yeah. I'm getting more than a little bit over 100%. So within the last really 2.5 years, I've gotten over 248% return already. That is awesome. Off of a 40,000 investment, I'm already all the way up to 150,000. So
yeah, that brings
you can
me
do
to
the same, you know.
Yeah.
That
Go
brings
ahead.
me to a question now that you said that. Like, I'm listening to this, and if I were somebody new coming into this, I hear the numbers, 100% return on
Mhm,
investment. That's gonna make me want to jump
mhm.
in. Like, how do you know what to jump in on, and how do people kind of measure their
I think
expectations?
that's a real hard.
Well, I mean, okay, how do you go about managing your expectations when you are going into
Mhm.
buying stocks? I don't know.
No, because what
So
I'm saying is,
I just
I
no,
think of it
that's a
like,
great question, actually.
it's a really good question. It's just like, I don't want to overwhelm people in the podcast. But go ahead, phone.
Mhm.
Give it a shot, because that's something that we can spend a whole podcast on. But good question. Go ahead, phone. Try to
Okay.
get that one.
don't patronize me.
No, I'm just
All right.
saying.
So no, that's a great question. So the question was essentially, what is a good expectation to have when you go into the market? All right. So like I told you earlier, most professionals, mutual fund professionals, are only trying to get you 8 to 12%. So in your portfolio from say your 401k and things like that, look and see how much you're getting this year. If you're getting 15%, that's excellent. If you're getting 20%, that's even better. But if you open up your own account and you just try and you can actually get 30 to 40%, there's something wrong, essentially, right?
Yeah.
Either A, you're actually paying somebody to get you 15% and you're getting 30% and you're
For
doing
free.
it for free. That is an expectation that you go, I'm doing better. And that means you're on the right track. Because that's why I ask people whenever somebody goes, well, I don't think I'm making a lot of money. And I go, well, let me see your portfolio. And I say, well, you're making 46%. You're making 46%
That's a lot.
return just by picking stocks that you don't know anything about. And I'm telling you, hey, this might be somewhere you need to look down. This may be something you need to research. And you buy it and you're getting 46% return. You're doing better than the professionals. So that's a good expectation to have.
Hmm.
So essentially around 20 to 25% return, it's excellent.
Hmm.
Anything over that, you're on God mode, essentially.
Yeah, and this is, and I want people listening to really think about this, because myself growing up, um, there's some people that when they become adults or get 30s, their parents say, "Hey, here, I've had this for you. Here's $100,000. Here's," and
Mhm.
I want people to think about how they could change their children's lives by creating a custodial account on one of these platforms we talked about, or whatever platform you decide on. We're not trying to steer you in any way, and just put $50, $100 in there a month in there. And by the time you're a kid, you don't even tell them you did it. Well,
Mhm.
actually, I talked to Jameson about his custodial account,
Mhm.
and we have conversations about it. But don't even give it to them when they turn 18. Give it to them when they turn 30. You might be able to give them $100,000-$200,000 easily. And how game changing could that be for somebody to be able to give them some money like that, so that they can hopefully make it
It
compound,
also
and
gives you peace of mind as a parent.
yeah, that you're actually
Hmm.
like leaving a legacy. And a lot of times when you're growing up, especially like where I grew up from, people throw that around a lot, leave a legacy. But sometimes when you hear that, it sounds expensive. Like when
Mhm.
you say legacy, people think about, oh, leave a house, oh,
Mhm.
leave, I don't know, stocks, leave this. But
Insurance.
yeah, you can do those things and be reasonable with it. You don't
Mhm.
have to like let me set aside $300 a month. And you can let the
Hmm.
compound interest do all the heavy lifting for you.
Mhm.
And the sooner you start the account
Correct.
for your child, the better.
Let that snowball roll.
Yeah,
Hmm.
let it roll.
Yeah, that's huge. That's huge. And you don't have to even, like I said, I think the most important part of a child's like mental, I guess, or financial well-being later in life is the fact that their parents start with them younger. I think a lot of people, their parents don't know anything about money. So then they don't really teach their kids about money. All they do is tell their kids to save money. That's the only way you can have money to save. You put money into the bank, you're getting less than 1%. So technically what they're teaching is no longer valid because, you know, 20, 30 years ago, when you put money in the bank, you used to get 7 or 8% to 12% interest.
Yeah.
That's not happening
Yeah,
anymore.
point one one
So a
one
lot of
one.
people that grew
Yeah.
correct. So a long time ago, people were they could be millionaires by putting money into a savings account, but that's no longer the valid point anymore. So they're still teaching their kids to save, but now it's definitely changed, you know. So yeah, it's important you teach your kids about money.
No, that's really important, you know, and just have those little conversations with them. It was so funny. We was in Home Depot the other day, and Jam, he just
Having
asked
a
me.
whole conversation.
Yeah, he
in
just
the
asked me
lumber
about.
yard.
He's like that stock app. You know, he just thought he was talking about it, and I was just like, what the heck? But you know, just off of us having little small conversations, and I'm explaining he's a kid, and I'm sure he doesn't fully get it, but that's how you start.
And it's okay to learn with your kid. You don't have to
Be
feel
an
like
expert.
you need to be an expert
Right.
before you
That's
start
a really good point.
doing, teaching them these things.
That is a really good point, because
Right.
a lot of times we think that as adults that like you have to be an expert in something to teach your kids something, but you can start together. Like, even this is going to be a silly analogy. You know, even I started electric skateboarding a year and a half ago. Recently just purchased an electric unicycle. I'm learning and I'm teaching him at the same time. We both, the blind leading the blind, but we we started the process together, you know, so we can grow together.
Right.
But I wanted to ask you one final question, and then don't want to overwhelm the people and stuff like that. So let's just talk. We kind of touched on it, but I want to kind of touch on like talking about not getting out too early and panicking. And then it kind of goes to what we were talking about earlier, the difference between investing and I'm drawing a blank.
Trading.
Yeah, investing and trading. So real quick, if we can just talk about like, when you get into this, initially starting, you don't want to be a person trying to trade because you don't have the skill set yet.
Yeah.
Like, you don't want to get in a boxing ring with Mike Tyson
But
yet.
that's what people think buying stocks is when they think, because that's what I mean.
Yeah.
That's what you see in movies. That's what you read in
They
books.
swing trading on quick.
Wolf of Wall Street.
Yeah.
You're watching that.
Right.
All these other movies, and you're thinking it's just like, I bought this. Okay, now I gotta sell it. That's what you think it is, you know. But it's definitely not that.
It's definitely 100% not that. When you go into, let's just say you decide to start investing and you're doing the dollar cost average, you want to look at companies that they're going to do well. So you start buying and things like that. Well, as you know, I've sent you many negative news. I'm a huge fan of Tesla, and I started our group with, hey, y'all need to get on that Tesla bandwagon while it's cheap. You know what I mean?
Mm-hmm.
And essentially a lot of people have, and a lot of people made a lot of return on it. And I still think Tesla's going to go up, way up.
Guys,
Yeah.
do your own research. Okay,
Yeah.
Disclaimer: do your own research before you don't say Patrick or Fong. You told me to do this.
Do your due diligence.
Do your due diligence.
Correct.
We're just having a conversation.
Correct. Yes, but you look into those things, and you know that there are certain days that somebody puts out an article, and all of a sudden the stock just drops.
Mm-hmm.
You're sitting there, you're like, oh crap, I'm losing money, or I don't have as much money. So as humans, what we do is we go, you know what, I'm going to cut my losses. I want to go ahead and go, I don't want to lose as much, so I'm going to sell out. And that's why trading is really bad, because that's all emotion, right? If it's hurting, because money, you're tied to that money, and it hurts to see it go down. So you don't want to lose as much, or you're saying, you know what, I'm going to just go ahead and get out because I think I've made enough money, and it's just, it's pulling back. So you sell out, and then the next day it goes back up. So if you look in the stock market, it's been around for over 150-something years. It's been through the World War I, World War II, the Vietnam War, Korean War, 9/11.
Mm-hmm.
It's been through a lot of stuff. And guess what? It's at all-time highs again.
Yep.
So today, in the short term, it may be down. But tomorrow, the next day, the next week, you're going to look at a totally different price.
Yeah.
And so, and most of the time when I'm looking at a stock, I look for things like that, and I look for those trends. I look out, to see where the best time to buy in, or the best, when it dips and things like that, I'll buy, and I'll just hold. And usually that's worked out for me actually 99% of the time already. So I haven't had any issues.
Yeah.
Now that's go ahead, Candace.
That's a good point because I know when you were talking initially of Tesla, I was like, oh no, I don't know about that. What's that guy name?
Elon Musk, Captain.
Elon Captain.
She said, "How you gonna Tony
I
Stark?"
was
Look,
gonna say
Tony
yeah.
Stark.
So I'm not sure about that. But then it's like you told us. I started researching, and then I found out they make batteries. We all need batteries. We make batteries. They work on solar energy, and they, working on
It's
that.
so multifaceted.
That internet. What is that internet rocket launcher? I don't know. Anyway,
She's talking about SpaceX,
Starlink.
Starlink.
Yeah, SpaceX, Starlink.
I
It's
started,
just so much.
thinking about that. Like, oh, okay, so this company has its pot in all these things that are kind of like real world things that we do actually need. So I felt more comfortable once I did my due diligence and did my research.
Mm-hmm. No, and these are all really.
And that's important.
Yeah, and
that's extremely important.
Yep, and it kind of makes you think of a silly analogy. It's like, you know how like it's kind of like how people should look at this when you initially get into it is like a marriage. And it's like when people are boyfriend and girlfriend, you can just leave whenever. You know what I'm saying? Like there's nothing like tying you to it. Like you just get up like we had an argument, all right, I'm out. But when you're married, it don't just work like that. Yeah. You know what I'm saying? Like you got to work it out, or if you want to leave, it's a whole process. You don't just get up and go. Yeah. So it's funny, kind of like it seems like trading reminds me of that. Like if you're gonna find something that you believe in, so that you can stick with it through the good and the bad because you believe in it long term. I really enjoyed this podcast, Fong. I know that we're probably approaching an hour, and I don't want to overwhelm people. But I have a question. If you've listened to this pod and it's been helpful for you, leave a comment below of something that you would like us to talk about a little bit more in detail, because we've talked about having more of these. Because really in 2021, and you've said this many times to us, Fong, he's like, you want to see people win. Like, I want to see people. We
all need to win.
Yeah, like I want to see people win. Like even just, I took a while doing a lot of e-skate and skateboard stuff because mentally I needed a break. Like a lot of people's like, man, you write books, you're an author, why are you doing all this skateboard stuff? And it's because it was like, yo, I mentally needed a break.
You needed to have some fun.
Yeah, but that doesn't mean that I still don't want to see people win, and I'm still not going to try to find a way to help empower people to get to the next level, whatever that is in their life. So Fong, I want to thank you for joining this podcast, man. And I'm thinking that this is going to be the first of many. What you think about that, Fong?
I like that. Yeah, I like it. I have lots of, I guess, how would you say it? I know a lot about, this stuff, and I like helping people. So if I could spread the word so that people would make a few bucks here and there, or even thousands of dollars, or hopefully one day we could all be millionaires. I would love to help with that.
Yep.
Yeah. But maybe you guys should just every time you call and ask them a question, you should just record it.
I know, right? No, but like I'm telling you, like it's like I think that this is going to be one of the staples on this channel, because I used to. If you follow my channel, I've had a YouTube channel for almost 10 years, and I've always done motivational speaking, empowerment, and stuff like that in schools and things like that. But I think that I'm really enjoying this podcast type format of being able to empower people in this manner. So I want to thank you for joining, Fong.
Thank you.
I want to thank all of the people that watched and listened to the podcast. If you have any questions, leave them below. If you want us to focus on something in our next episode, leave it below. If you, I want to also take a minute to thank all my Patreon subscribers. Want to thank you guys for supporting the channel. And just also want to thank everybody and encourage you to subscribe if this was helpful to you.
And he also wants to thank me for just being who I am.
Oh, God. Crazy. Thank you for joining. Yeah. Thank you for joining us, Fong.
Thank you.
As always, we'll see you guys at the top because the bottom is too crowded. Peace.